the Ujjivan Financial Services IPO. Samit Ghosh, the CEO, is in the studios with us. Mr. Ghosh, hi, good morning. Tell us how the response has been to the IPO. What were the subscriptions like?
Good morning. Thank you very much. The results have been overwhelming. As you know, the overall, it was 41 times oversubscribed. And what is special for us is that our retail was 4 times oversubscribed, which was an area we had focused very closely.
So are you now blaming the merchant bankers that they didn't price your issue well? I mean, the issue is getting such a terrific response, which means that you could have asked for some more.
I don't know. I mean, whether they priced us well or they underpriced us, but I think it got a very good response and we are very happy with that.
Well, the real journey starts now when you will become a listed company. That's the time when you will take a new birth, so to speak. I was going through your IPO prospectus or the red herring prospectus, very impressive both in terms of return ratio. Now, what has differentiated Ujjivan up until now is the fact that your focus on microfinance and you also have a small payment bank license. How will things evolve in the next 3 years? I'm not getting into absolute numbers. I appreciate the fact that you cannot give me forward-looking numbers, but I just want to understand the basic, structure.
Well, we've got a small finance bank license and, we have a extremely strong 10-year track record as an NBFC MFI. That's the platform on which we are going to build and transform to a small finance bank. First couple of years, obviously, we will be focused on the transformation from an MFI to a bank. And that period, we have to really focus on, we cannot expect astronomical growths, etc. But once we settle down after 2 years, I think, we will see major growth in this area. We see this, this has been our aspiration because, as a bank, we can really provide the full range of services for the target customer base, which is unserved and underserved, which is mandated by the RBI. And I think we will have a very successful mass market bank, hopefully in 5 years' time, from the day we start our operations as a small finance bank. That's our goal.
That's precisely what I wanted to chat about then. Give us a little bit more of a highlight as to how you would be diversifying your product mix and how would you go beyond, being in the MFI segment?
Well, today 85% of our asset base is in the traditional group lending segment, which really forms our sort of base of our business. And then for the last 3 years or 4 years, we've actually been working on building up our business in the micro SME and housing segment also. And we feel with the government's push into this micro SME segment, the micro and the small business segment, which is totally today unserved, will give us the big impetus for growth on the asset side. Housing is also another area which has got a lot of gaps, and I think we will see growth in that side. The big change which will come really is on the retail deposit side, and we plan to focus primarily on our customer segment, which is sort of unserved in terms of retail, in terms of liabilities, because they may have accounts with banks thanks to Jan Dhan Yojana, etc., but they don't utilize these bank accounts for savings as such. They still continue to save in the unorganized sector, and we see that there are huge amounts which are of savings kept kept outside the banking system in the unorganized sector, whether it's chit funds or various companies which have been raising deposits and many of them failing. So that is an area where we want to focus. We feel that, from what we have seen in Grameen Bank and others in Bangladesh, that 40% of our deposits probably will come from our borrowing customers. But there are other segments. There are a couple of segments above this group lending segment, which again forms as micro entrepreneurs and also salaried workers who again don't save, may have bank accounts but don't save in the organized sector, will form also another source of our retail funding. So our focus will be in this unserved and underserved, and that's the mandate which has been given to us by the Reserve Bank. We also feel that our remittance business, also given our network, because we operate across India in 24 states and union territories, will give us a tremendous advantage to also build our remittance business. Finally, we would also be working with insurance companies and others, also maybe mutual fund companies, to offer third-party products which will come in at a later stage. So we would then be able to provide a full range of financial services which this segment, the unserved and underserved, require. And with that, I think we will transform to a mass market bank.
Mr. Ghosh, lots to really chat about, but just a couple of key details. Your foreign shareholding as of now stands at 90.6%. By how much does it come down post the listing?
Yeah, see, our initial foreign shareholding was around 90%. After the pre-IPO, where we raised about 292 crores, it came down to 77. And post-IPO, we expect it to be between 44 and 45%.
We'll get closing comments from you. If I look at your AUM and the historical data, that's what we have right now, as declared by you, as documented by you, you've managed to grow your AUM at a CAGR growth rate of 50%. Now, the market size is so large that for you to grow at 50%, I would still imagine that it is possible. But is it realistic that you will continue to grow at business at 50%, even on a large base?
It is realistic, and if you see other microfinance institutions, larger microfinance institutions, they are also growing at a very substantial clip. But I think, as I mentioned, in the first 2 years of transition, we will be looking at our regular growth, but also at the same time be careful that as we transform to a bank, we moderate our growth to a certain extent, and after 2 years, we then can put our foot on the accelerator and grow substantially.
Final question. Currently, because you are present in the microfinance business, your NIMs are higher. But when you will become a bank, there would be change in business model. So on an aggregate basis, what will happen to your NIM picture?
Well, the thing is, currently we do most of our borrowing, funding is through term borrowings from banks, and there the costs are around 12%. Our operating costs will for first couple of years, because we'll be investing a fair amount of in technology, in terms of channels, in terms of upgrading our premises, etc., will go up. But I think with becoming a bank, our cost of funding will drop. Initially, of course, the interbank rates are much lower than the borrowing rates at which we are currently borrowing from banks. And later on, as we build up our retail deposit base, that will also help us to bring down our costs. So our NIMs would be, they are very large. I think they would moderate as a bank to a certain extent, but still be very healthy. The only thing I just want to finally tell you all is I'd like to thank all those who have invested with us and also those who have supported us during this IPO, especially the analysts and brokers who we worked with in the last 4 months. And I'd like to thank them very much for their support.
Oh, yes, indeed, Mr. Ghosh. And I'm sure you're going to live up to all their expectations and hopes as well.
Well, we sure hope to do that.
Okay, great chatting with you. Thanks so much for taking the time out and speaking with us.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.